Good afternoon, everyone, and welcome to the fourth and final financial forum of the year. We're here today, as always, with Brian from Dunhill Financial and Adrian and Patty from the Adrian Leads Group. We're also lucky enough to be joined by the great Jonathan Hadida from Hadida Tax. But before we hear from Jonathan, please bear with me because we have a disclaimer to go through. So, Dunhill Financial is a registered investment advisor. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. With that out of the way, Brian, why don't you take the lead?
Thank you, Paulina, and welcome everybody, and thank you for joining the webinar today. Normally with this cast, we like to talk about taxes. Jonathan, always wanting to take an entire bit, is going with the two inevitables from Benjamin Franklin and taking death and taxes. So we're covering the full gambit now. It's my pleasure to introduce my friend Jonathan Hadida, the founder of Hadida Tax, back in 2021. His firm helps Americans move into France and to deal with all the different aspects of tax. With a background with a master's degree of international law from McGill University, he's also a lawyer, but we don't talk about that anymore. The
Why
long-term
not, Brian?
well, we don't talk about his negatives on public forums, right? Something like that. You're a reformed lawyer, something like that, Jonathan?
No, no, no. I'm a lawyer. I'm a lawyer in CPA's clothing. I'm a CPA in lawyer's clothing. I'm a lawyer in CPA's clothing. Let's put it that way.
There we go. A wolf in sheep's clothing. That's
Yes,
what we
exactly.
heard just right here. A long-term expat himself. He's had roles in Canada, Belgium, India, Switzerland, France, and the United States. And this gives him a great deal of experience from his background at Deloitte to now running his own firm. Known for his passion and the bee's knees, Jonathan relishes the challenges of finding the best possible solutions for every one of his clients. While most people avoid estate taxes at all costs, he dives right into it. So, with that, it's my pleasure to introduce Jonathan Hadida.
Thank you very much, Brian. I am really excited to be here today to talk about a topic that I absolutely despise talking about. Every time I talk about this topic, my face goes down and sour and says, I'm sorry, we have to talk about it. And then the folks always say, but we're all going to die one day. So, hello, everybody. My name is Jonathan Hadida. I'm here to remind you we're all going to die one day. So now let's talk about how to make sure that your heirs keep as much as possible when we go. So, as Brian said, I'm Jonathan Hadida, Hadida Tax Advisors. We are a small U.S. and French tax firm assisting Americans living in and around France with their U.S. and French tax needs. We also assist individuals with their French estate planning needs. We have a member of our team is a French attorney who may jump in on the call today to answer some questions if we get too technical for me, which can happen. So we have an estate planning attorney who can assist with drafting out wills and answering questions on trusts and various other things. So we try and be as full service as possible. So without further ado, what are we talking about today, folks? Basically whatever Adrian wants, because that's usually the way these things go.
Is that how it works?
That's how it works. That's how
inheritance taxes. Yay!
French inheritance taxes, because Adrian wanted me to talk about that. So we're going to talk today about French inheritance taxes. We're going to talk about what happens when you receive an inheritance while living in France. Now, this happens a lot. You move to France and your parents pass. What happens with that? We'll talk about gifting in France. We'll talk about trusts in France. It is very important to remember, France does not trust trusts. So we'll talk about that. And then last but not least, we'll talk about what can be done. So let's jump straight in. Inheritance in France. How does France treat inheritances? The answer, bad. So who is subject to French inheritance tax? You are subject to French inheritance tax if you die in France as a tax domicile, and France is your tax domicile.
Okay, but wait, it's the heirs.
Oh, sorry. Yes, I apologize.
Yes, it's the
You're
heirs
not
who
taxed.
suffer the inheritance tax. Let's get this straight, Jonathan.
Yes, sorry. Apologies. The heirs will suffer for the inheritance tax. So, where will your heirs pay inheritance tax? If you die in France and France is your tax domicile. Okay. Your heirs will also pay French inheritance tax if you die as a non-French domiciled with a secondary home in Nice, because everybody needs a secondary home in Nice, or like Brian likes to say, Antibes South.
Or
No?
Paris or anywhere in France.
Yes, but please, we all know that Antibes and Nice are the most beautiful places in France, n'est-ce pas, Adrian?
Well, some of us think that's true.
Fair enough. Fair
But not
enough.
all of us. But okay,
Not
go
all of
ahead,
us,
keep
but
going.
okay, so if you die and you have French sourced assets, you'll be subject to French inheritance tax. So what does that mean? If you die in France as a French domicile, what is subject to French inheritance tax? Your worldwide assets. Now, if you're an American citizen, there are certain carve-outs, and we'll talk about those later. But if you die in France as a French domicile, as with France as your domicile, you will be subject to your heirs will be subject to French inheritance tax.
Can I clarify one thing? I'm terribly sorry to interrupt.
Yes, ma'am.
Um, so when you say domicile, you mean tax residency, correct?
I mean that France is your home, is the place where you lay your hat at the end of the day. It's the place where you
Okay.
are a resident. That's again, your home. A domicile is a little bit more than a residency. You can have a residency but still be domiciled somewhere. But domicile is basically where do you intend to lay your hat at the end of the day? When you're finished your vacations or your trips, where's your home? So if France is your home, you will be a French tax, and your heirs will be subject to French inheritance tax.
Okay, but there is tax residency, which we know that conversation, okay?
Yes.
But I had a client today, for example, that has 3 homes in the US that they share their time between 3 places, right? So it could easily be where they would share France as one of those 3 places.
Absolutely.
And they hang their hat on all 3 of them.
Again, it's a facts and circumstances question that the heirs will need to prove to the French authorities. The French authorities in that situation where someone has 3 houses in America, 1 house in France, there's a good argument for the heirs to make that France is not their domicile. Now,
Okay.
that says it's facts and circumstances. You may remember from previous webinars the magical words, it depends. So it depends on your facts and circumstances and where you make your life. If you've made your life in France, you will be a French, you'll be a French tax resident, and your heirs will be subject to French inheritance tax. But again, it depends on what you do. If you spend a third of the time in France, 2/3 in America, you're probably not even a tax resident. Your heirs are probably not subject to French inheritance tax. It depends. Now,
Okay.
in
Is
the
there a
case,
way to ask to define if you're domiciled there?
it's facts and circumstances, Brian. We can look at everybody's case will matter, but we can define it based on your lifestyle and your situation. So, for example, I have a friend of mine who's going to buy who has a boat. He likes to take his boat everywhere. So he's going to dock his boat. He docks his boat in Gibraltar. He moves it around the coast. Now, if he dies in France and he has a home in France, but he also has a home, let's say in, I don't know, London, well, he may or may not be domiciled in France. It depends on his facts and circumstances, and we have to look at his whole life when the time of passing. But again, in a case like Adrian just laid out there, which is Bob Smith has a house in Texas, California, and Utah, and has a house in Nice. If Bob Smith spends all his time in France, probably domiciled in France. If Bob Smith spends a portion of the time in France and the other portion in America, there's an argument to be made that he is not domiciled in France.
Okay.
Okay?
Got it.
One strategy that we've used in the past to try to define it prior to death is to go over the gift limits to actually apply to the fisc to ask whether they agree with us that there shouldn't be gift taxes withheld.
Yeah. we can definitely ask for clarification from the authorities. Again, this is a general conversation we're having here, Brian. We're not going into specific facts. And to be clear, folks, everything we're saying depends on your specific fact set. It is imperative. And again, here's my 2-second sales spiel. You need to ask for help and to clarify your situation because it depends. Okay.
I have a plan going into the inheritance instead of just trying to deal with it afterwards.
Try not to get hit by a bus without a plan. If you get hit by a bus, you get hit by a bus. But if you get hit by a bus with a plan, at least you can go off and know that you had the plan. I really dislike this topic, talking about death. It's so morbid to talk about getting hit by a bus, but alas, we have to. But so, if you die as a French domiciled, what happens? Why is it bad? Why it's bad is because French inheritance tax levels are high. Okay. Now, this is the simplest chart I can find on a relatively complicated topic. Long story short, when person one dies and leaves all his or her assets to a spouse, there is tax, it'll be tax exempt. Okay, so
or a civil partner. So if you're
or civil partners. So, for
Right.
example, when Bob and Joan Smith came to me the other day and said, "Hey, we're moving to France, and we have been together for the last 40 years, and we are against the institution of marriage," I said, "Right on, you do you, but you should get a Pax. You don't have to get married, but you should get a Pax, because if you are not a civil partner, Bob and Joan Smith," which kind of funny that they're dating and not have the same last name, but Bob and Joan Smith, they would be seen similar to me and Bob, or me and Joan, two people without any ties or relationship. I'll back up for a second. France's inheritance laws depend on relationships. Everything in France is relationship driven. So depending on what your relationship is with the person, you will have a different tax level. So in the situation of Bob and Joan Smith, who are not married and not dating, or are just dating, they would be seen as boyfriend and girlfriend, basically me and Bob Smith, me and Joan Smith, two strangers, and it would be subject to tax on the everyone else level, folks, 60%. So if Bob and Joan Smith go to the city hall, get a Pax, a civil union, a civil partnership, they would then be treated equivalent to a married couple. Not married, don't have to go through the institution of marriage, but at least they'll be covered similarly to a married couple, meaning that when Bob or Joan dies, the assets will be transferred between them, inheritance tax free. Okay, so if you're planning to move to France and you're against the institution of marriage and you're just boyfriend and girlfriend, I still recommend getting a Pax, because a Pax will help with the inheritance side of it all. Okay, now from there, direct heirs, your children, grandchildren, parents, grandparents, they will receive your assets with €100,000 tax-free allowance. Okay, so when Brian passes, his daughter will receive her assets with €100,000 tax-free. From there, it's taxed up to 40%. Okay, again, it's actually 45%. It's 40, it's 40, 45. 45, yeah, sorry, there's a problem with my slide, I apologize.
It says 40, Jonathan.
No, it's a mistake. There's a mistake on it, Adrian. I made a mistake.
Okay.
I'm sorry. It happened. It happens. But it's up to 45. It's up to 45%. I apologize. It's 40% up to that 80, and then there's a piece underneath that is not showing, and I'm really sorry, folks. It's 45%. Over 1.8.
Over the 1.8.
Over the 1.8 million, it's at
1.85.
45. It's at 45%. I am sorry. So basically, Brian's daughter will be subject to inheritance tax at a graduated rate up to 45%, and anything over 1.8 million is 45%. Okay? If you have brothers and sisters, it's 35% for the first 24,000, then 45%. For nieces and nephews, 7,900 tax-free. Everything else, 55%. Everyone else, other relatives up to the fourth degree, 55%. And then the mailman or me, 60%. Folks, inheritance tax in France is relatively punitive and is relatively high. So even to children, it goes up to 45%. To brothers and sisters, 45%. Nieces and nephews, 55%, almost from the start. So unlike the US, which has a 13.9 million and a 15 million kicking in on January 1st, you're looking at French inheritance tax very differently and far more punitive than in the US.
What about to a charitable organization?
So, great question, Adrian. The answer is it depends.
Here we go.
If you are a US citizen, okay, so Brian and I were talking about this just the other day. Brian has a client, they want to give to a US 501c3 when they pass. If you give to a US 501c3, it will not be subject to French inheritance tax.
Wow.
Yeah. If you give to a US charity that is not a 501c3, that is not a recognized charity, you will be subject to French inheritance tax.
Wow.
Okay, so again, the most important thing is if you're going to give to charity, like in all cases, it has to be a 501c3.
Okay, a 501c3, explain that to me what that is.
Ryan, go ahead.
It's literally any charity that's recognized by the IRS for being a charity. 501c3 is the tax code to it in the United States.
Okay.
So what it becomes important about is some people will have charities that are important to them in other countries other than, say, France and the United States. You might want to rethink those. The good news is, for example, Israel comes up a lot in these types of conversations. A lot of those organizations will have a 501(c), so we'll have them rewrite their wills to gift to the U.S. association to pass down to, say, the Israeli or whatever foreign entity it is. In Belgium, they have the King Baudouin Foundation that's 501(c)(3) in the U.S., and that can give to charity just about to any organization in Belgium. So,
and what if you want to gift your dog?
You cannot.
Okay, it's not allowed.
You cannot gift to an animal.
In the US, you cannot gift to an animal?
Oh no, in the US,
in the US
potentially, in the US you can. In the US, you can do anything almost, it seems. In France, you cannot, because an animal is not a person. You can only gift to a person or to a charity. So no, you cannot do to an animal. Now, if you die in France, we've gone through the taxation. So what happens if you die in France? If you die in France without a will and you die intestate, France has something called forced heirship laws. Brian, do you know about forced heirship laws?
absolutely.
Yeah.
Goes back on Napoleonic Code, right?
Absolutely. Everything comes.
He lost the war, but essentially he has most of the laws in France still declared from him.
Exactly. So France's forced heirship laws are there to protect the children, because France does nothing if it does not protect the children. If you die intestate in France, French forced heirship will kick in, meaning that a portion of your assets will be automatically distributed to your children. So even if you want to distribute your assets to your spouse, a portion will be given to your children, depending how many children you have. So if you have one child, it's 50% to the child, 50% potentially to the spouse. If you're like me and you have 3 children, it's 3/4 to the children, 1/4 to my spouse. Okay. Now, as Americans, how do we get around this forced heirship? How do we avoid being subject to these French forced heirship laws?
You have to have a will.
Exactly, Adrian. Absolutely. Because in America, what generally tends to happen is that when person 1 dies, all assets are left to person 2. So how do we give all the assets to person 2 before giving to the children? You need a will. Now, you need a U.S. will. Now, this is for U.S. citizens. U.S. citizens who die and have a U.S. will, France will recognize the U.S. will for the allocation of assets. Meaning, if you die in France and you have a U.S. will and you say, me, Bob Smith, I would like to leave all my assets. Now, Bob and Joan Smith have gotten over their issues with marriage, and they've gotten married after getting paxed. They realized they wanted to get married. Again, right on, and their choice. Bob and Joan Smith, I want to leave all my assets to my beloved Joan Smith. Well, he needs to then put that into a U.S. will, okay? Because Bob and Joan Smith, they have 3 children. Without a U.S. will, if they die intestate, the children would theoretically have forced heirship and have right to 3/4 of Bob's assets, and Joan would have right to 1/4. Now, again, there are certain tax planning ways you can get around this using usufruct or various things. It is imperative to understand this is general advice, and you should consult and make sure you have this all written down. But
do you mind going back to the slide that has the percentages on it?
yes. And again, there is a mistake on this, so I do apologize.
Yes, we know. Okay, so, but I wanna also just make a note that it's best to if you own property in France, then you're going to want to have a French will that refers to the U.S. will.
So even if you don't have property in France, what we recommend you do is that you have a U.S. will which does your allocation of assets.
Right.
Bob gives everything to Joan, and then he gives all the rest to Chachi. That was Joni. It would have been funnier if I had done that. My bad. But if Bob gives it to Joan, and then Joan gives it to the children, you need a U.S. will. We generally recommend you have a French will as well. The French will would generally say something along the lines of, I, Bob Smith, when I die, please go look at my will that was drafted in the great state of North Dakota or wherever. Okay? And that will apply for my allocation of assets. The will only affect your allocation of assets. It will not affect the tax rates that you see on screen. Okay? So you can have a will. It will get around the French forced heirship laws. It will ensure that Bob gives it to Joan and not to the children, but it will still require French inheritance tax laws to apply. Again, other situation, Bob and Joan have now are on the outs, and Bob wants to leave all the money to his good friend Brian Dunhill. Well, Bob then goes and puts in a will. I want to leave all my assets to my good friend Brian Dunhill for his wise sage counsel over the years. Brian, of course, being of sound mind, doesn't want to do this, but still he doesn't know about it until it's done. A will help you do this. Okay.
Okay, and creating that will is very simple, actually.
The U.S. will, the French will is simple. All you need is a pencil and a piece of paper, and you write it all down, and then you give it to a notary. In French. But of course, everyone who's not in French, it doesn't need to be in French, Adrian. It actually could be in English, and then your heirs.
No, it's true. It's true. It can be in English, and then it's just filed with the government. I mean, a notaire can do it very easily.
It should be done with a so we can do it for you with our French attorney who works with us. He would then get it registered with the French notary, because France has learned from stories such as Prince or such as Aretha Franklin. France doesn't want to have this. So what happens in France is you have a will, you draft it, you take it to you draft it, you take it to the notary, you say, dear sir, dear madam, please register this into your computer system. They do it for a fixed fee. And then when you pass, your heirs can go to a notary and say, hey, Bob Smith has had a will. Can you please pull it up? And a notary can pull it up in the central registry.
Right.
Okay. So U.S. will to do your allocation of assets, French will to say, yo, my U.S. will applies, a notary to notarize it and put it in their system. Okay. That is how you
Jonathan?
Yes, ma'am.
I just wanted to ask a couple questions that are based on your chart. We have a couple people asking about where do stepchildren fall on the chart.
Stepchildren. Thank you very much for asking this great question. I have really, really bad news on stepchildren. Stepchildren are falling into the everyone else category.
Yeah.
Stepchildren is a very difficult conversation to have in mixed families, and we have this 3, 4 times a week. Mixed families, unfortunately. So Bob and Joan, they are remarried. They got married. It's a second marriage for each. Bob has 2 kids. Joan has 2 kids. Bob dies, leaves all the assets to Joan. Okay. Joan dies. When Joan dies, she leaves all the assets to the 4 kids. 2 from Bob, 2 from Joan. Joan's 2 kids, they fall into the children tax rates up to 45%. Bob's kids, they fall into the everyone else category, and any transfer of assets over €1,594, 60%. So that is why you need to have proper planning, because what I would recommend Bob does is that, hey, Bob, when you die, you may want to leave everything to Joan, but you might want to leave your kids the first 100,000 each, tax-free exempt in France. Again, there's proper planning to be done. But yes, stepchildren are not considered as children. President Macron, when he came into power in 2022, stated that he was looking to do something for stepchildren. This may be legislated in the future. Long story short, as the law stands aujourd'hui, no luck. Great question, Patty.
So I have a way around.
Adopt?
No, no. Okay, so if you trust the person who is your heir, like your primary heir, who's going to have the lowest tax rate, okay, and you're not going to write this down or tell it to the authorities, but you're going to tell that person there's a certain portion of that you would like bequeathed to someone else later, after. So, in other words, the one person receives the inheritance at the lowest tax rate, and then that person doles it out based on the deceased request.
Sorry, who's receiving the assets, Adrian?
I'm just saying, okay, that if you trust the person who is your primary heir who has the lowest tax rate, so they inherit the most amount of money, to then further, okay, donate some of that to the others based on the deceased's request. It is not written down. There's nothing formal about it whatsoever. Then it is one way of managing that better. You with me?
I'm with you, but the problem with that, Adrian, is it's the Bob and Joan situation. Joan to Bob's kids is basically not again, very, very indiscreet of me to say it this way. Poor Joan. I'm sorry, Joan. She's like a stranger to the kids for inheritance purposes.
I understand. That's why I'm saying that it is a workaround.
Fair enough.
Okay.
But yeah, but basically French inheritance when it comes to stepchildren is unfortunately relatively draconian and relatively penalizing, I'm sorry to say, folks. Okay? So, again, just to conclude on inheritance, there's inheritance law and there's inheritance tax. If you die in France, you can use a US will and a French will to get around French law, the forced heirship rules. You cannot, if you die in France as a French domicile, you cannot get away from French tax. Okay? So even if you do an allocation of assets, you will still be subject to French inheritance tax. Okay? And depending on the level of relationship to whom you leave your assets, it could be up to 45%, or in the absolute worst case, up to 60%. Okay? Now, as Adrian likes to say, you've got to live. So it's just money. You'll be dead. Again,
you won't care, exactly.
Am I saying it right, Adrian? Did I get your phrase right?
Yes, you'll be dead. You won't care. It's just money.
Yeah. But
I mean, as you know, I'd like to remind people that that's all it is. And there is life out there. And the reason we've worked so hard to earn all this money is for our lives, right? And to live the life the way we want to live it. So I think it's really important to do this, but we just have to do it as best as we can without it interfering in our ability to have the life that we want.
Yeah. Yep. So basic again, law, we can work with that. We can get around the forced heirship rules because you're an American citizen. The tax, much more difficult, much more draconian. Okay?
Okay, move on.
Let's move on. Brian, you good?
All good.
Great. So here's another question we receive all the time. Jonathan, what happens when my parents die? When Bob Smith, my neighbor, dies? He's in Wichita, Kansas. What happens when he passes? Well, here's the simple rule. All worldwide assets are subject to French estate and gift tax if you receive an inheritance in France. Okay, so basically, Bob Smith is in France. He receives an inheritance from his neighbor, Bob Smith. Bob Smith in France, who receives the inheritance, will be subject to French gift and estate taxes, provided he's lived in France for 6 out of the last 10 years. Okay, so Bob, who receives the assets from his neighbor, we'll call him Jim, in Kansas, will be subject to French estate taxes on the amount of inheritance that he receives from Jim. Okay, so Jim leaves him $1 million. Bob is required to file a French estate tax return reporting that $1 million. That's the bad. Now to good. The U.S.-French Estate and Gift Tax Treaty has a provision under Article 8 that U.S.-sourced assets from a U.S. situs, a U.S.-placed donor, is only subject to inheritance tax in America. So let me say that back in English, because I know it was not English there. Bob receives money from Jim. Jim is a Kansas Jayhawk all the way, rock chalk Jayhawk. He leaves him $1 million. Bob has to file an estate tax return in France. Bob does not have to pay French estate taxes, though, because all of Jim's assets were American in America. Okay? Has to file, so you'll have a filing requirement, but you will not pay estate tax. Similarly, Bob is getting married. Jim wants to give him $1 million as a wedding present. Bob will have to file a gift tax return in France to report the gift. Again, because the gift is a U.S.-sourced asset gift from a U.S. citizen, there will be no tax. There will be filing requirements, but no tax. Okay? So it's imperative to understand, you receive an inheritance, you receive a gift from an American, you need to file that to France. And the reason you need to file it with France is simply to let France know, I got this money from this means, and that way France doesn't question, doesn't think it's something illicit or whatnot. It's to paper your life. So again, you'll file a tax return, you will pay no taxes. The only fee you'll have to pay is a notary fee or an attorney fee for filing the estate or gift tax returns. Okay? And just note that this gets kind of funny. The fees for the notary in terms of how much they charge are fixed by the government and is based on what you receive as an inheritance. So again, what the full inheritance, the full inheritance of Jim. So if Jim dies with $10 million, leaves Bob $1, Bob's tax return has to report all $10 million. Okay? Bob's fees will be based on Jim's $10 million. It is fixed by the notary. It is fixed by the state.
Whoa.
It cannot be changed. It is expensive to do an estate tax return in France, but it is far more expensive to have France tax it. So you want to file it to paper your life and to avoid any issues with the French tax authorities in the future, and also for your heirs when you pass.
But
Okay?
Jonathan, my daughter just inherited a bit
Yes.
from her father who passed away about a month ago. But she's not tax resident in France because she hasn't been living in France for the last 24 years. She will be next year. So in other words, that inheritance is certainly not subject to French tax.
It's the date of death that matters. So whenever
Okay.
someone comes over, and again, I really dislike talking about this subject because it makes me feel morbid, but it's when did the person die? So your ex-husband passed
About a month
and a half
ago.
ago,
Yeah.
month and a half ago. Erica's going to move in a year or 6 months, whenever she
Right.
moves. It's after she's come. Therefore, she will not be subject to French estate
Great.
taxes. I'm gonna use Bob Smith because I don't like
The
using.
timing was quite good.
Yeah. So, but long story short, if it had reversed, okay, Erica moved to France a month and a half ago, and your ex-husband died a year from now, then Erica would have been required to
Right,
file an estate
right.
tax return. Again, there's a 6 out of 10 rule. I always recommend filing to cover and protect yourself from future questions from the authorities, because they can go back even after you're dead if they see a huge transaction. The French authorities, when you pass and your heirs, they will look unlimited amounts of time. So it is imperative that you file this to, again, paper and cover yourself and your heirs for the future.
Now, Jonathan, you love to talk about why France is the bee's knees. There's only 16 of these actual double taxation agreements for estate taxes with the U.S. Most countries don't have them.
Yeah.
France has not only a double taxation agreement that's amazing, the estate tax, and the totalization agreement. All three of them, and most countries don't have all three.
Yeah, but most countries probably don't have such steep inheritance taxes either.
Most all of them in Europe do.
Really?
The exceptions are Portugal and Italy. Italy's at 4%, and that's thanks to Berlusconi, and Portugal has gotten inundated with too many expats, so they might be changing that. So, especially the countries surrounding it, Germany,
Yeah,
just as
same
heavy.
story.
The Belgians, just as heavy.
Right.
Here in the UK, you only get $1 million exemption. So you'd be surprised. Most developed countries do have hefty estate taxes.
I'm not surprised. Okay, Jonathan, we've only got 20 minutes left, so we need to
We'll get there, Adrian. We'll get there. We always do. We always do. Gifting in France. When you make a gift in when you make a gift in America, there's an exemption limit that's an annual exemption limit. So right now it's $19 million. You can gift in America $19 million per person, tax.
19,000. 19,000.
Oh, what did I say? 1,900?
Yeah. No, you said
No,
19
you said
million.
19
19
million.
million.
19 million. That'd be magnificent. 19,000. Sorry.
Jonathan's going to be like Oprah. He's going to give everybody 19 million. 19 million for you, Patty. 19 million for you, Adrian.
I invested with Dunhill Financial. I could do this kind of stuff. Anyways, no, Brian, not good enough. Okay, long story short, in America, you get a $19,000 per year per person exemption from gift taxes. Per year per person. In France, it's by relationship. And it's every 15 years. So, if Adrian wants to gift her daughter, she can gift her daughter 100,000 euros tax-free every 15 years. Similarly with Brian and his daughter. Well, if they want to do it to a sibling, it's $15,932 every 15 years. Great-grandchildren, $5,300. Nieces and nephews, $7,900. It depends on the relationship, but it's every 15 years. So keep in mind, if you're planning to do some gifting before coming, if you have any gifting to do in and around a move to France, do it before you come. Okay? Do it before you come. And here, again, I'm going to say something that's kind of interesting. If you gift to someone within a relatively short time frame of coming to France, be it 6 months, be it to a year, but again, it's facts and circumstances, so this is not general advice. This is this is, good rule of thumb. You might want to reach out and ask, should I file a gift tax return with the French authorities again to see why my butt? Basically to provide yourself protection in the future to show that the gift was not done when you're in France. So again, you move to France on January 1st, 2026. You make a gift today. You probably should file a gift tax return with France, simply saying, hey, I made a gift to X. It was done while I'm outside of France and therefore is not subject to French gift tax. You can't come back and get me anymore. Okay? So again, gift taxes, always something you'd want to talk to us about before coming. Even if you make a gift a little bit before, you might still want to just, to protect yourself, make a filing. Okay? So with that, Adrian, treatment of trusts. I'm going to go a little fast because I've talked about trusts numerous times. Long story short, folks, France does not trust trusts. You have a trust, reach out to us before and we can walk you through what the French tax ramifications will be of trusts. En gros, folks, France trusts bad. Kind of like me and good jokes. Doesn't happen very often. Trusts and France do not work. France will have you do filing requirements. France will have punitive taxation of the trusts, of the income that's distributed from the trust. And guess what? They will assume that all the income distributed from the trust is all monies distributed from the trust. They will assume it's income, irrespective of whether or not it's corpus or not. You'll have to prove it to them. Long story short, if you have a trust, reach out and we can talk you through your situation. Again, there are situations where keeping a trust makes sense. We will not tell everybody get rid of the trust, but having a conversation and doing proper planning with a trust is imperative to do before you come to France.
Okay, can I make one clarification?
Yes, please.
I think the difference is not before you come, but before you become tax resident in France.
Yes, but again, I always assume that when you move to France to move for your life, assume you're becoming a French tax resident.
Yes, but not everyone. Okay, not everyone is moving to France in total. I just want, because we constantly get this question. If I have a visa, does that make me tax resident?
No.
No, it does not. Having the visa has nothing to do with your tax residency. So I just want to make sure it's really clear because people tend to confuse that. With they've got this visa and oh my God, can they leave the country? Of course they can leave the country. The visa itself only enables that person to be in France more than 90 days within any 180-day period. But it does not necessarily make them tax resident in France. I just want to make that really, really clear.
Yes.
Okay.
But again, facts and circumstances. This is a general discussion, not a specific fact. But yes, Adrian, you're absolutely correct. And Brian's head is really big. So if everyone's watching and can look at Brian, it would be a good time to do it now.
Thanks for that, Jonathan.
You're welcome. Okay, so trust France bad.
Yeah, I would like to point out one other little thing on trusts. Even some irrevocable trusts, there are opportunities to unwind them or sell the interests in them that actually get you out of the problem. That doesn't mean that you should do that every single time.
No.
I.e., if you have a charitable remainder trust back in the States, you want to have the conversation with Jonathan to find out what the cost would be to have it in France and also have the conversation with me and my team of how you could potentially sell it off. Because in different situations, it's going to be better to do one versus the other, depending on the pricing, which is really dependent on your age and based on the tax ramifications of that trust. So when Jonathan's saying fact and circumstances, he really means it. Every single situation is going to have a different outcome based on
every
all those
client is different. Every client is different. Everybody's fact set is different. Okay? What works for Bob and Joan might not work for Bob and Sally. Okay? But yes, it's imperative to just know you have a trust. We need to talk about it, folks. Okay. So what can we do? What can we do to avoid all these punitive French taxes? And again, you haven't heard me say the bee's knees for American retirees today because, again, Inheritance in France is punitive. France is great, folks. As long as you're alive, it is the bee's knees for American retirees. Apologies, I'm obligated by contract to say that at least twice every time I'm around Adrian and
And if
Brian.
you're dead, you don't care.
We already said it's the bee's knees if other people die, just not if you die.
There you go. There you
Other
go.
people
Three
die in the
reasons.
States because of the double taxation treaty on state taxes. It is the bee's knees.
Yes, sir. Exactly.
Condolences to your ex-husband, Adrian.
Yeah.
I'm sorry, I didn't mean to make a joke out of that. Okay, it was inappropriate.
I think I just doubled down on the joke, so apologies for that.
Anyway, okay.
So coming back, planning ideas. What can we do? We can do gifting. So we can do gifting before we come to France. We can do gifting when we are in France to use up our 100,000 per child exemption, 15,000 for brothers, sisters. Again, we can do gifting during our lifetime to again reduce our assets. So that's something that can be done. We can look at where our location of assets are. So if you're a French domiciled person and you die in France, but you have a U.S. home, guess what? U.S. real estate is only subject to U.S. inheritance tax, meaning that a U.S. home will not be subject to French inheritance tax. That's a huge win.
Mm-hmm.
Additionally,
earlier you said the Picasso that's in that house as well.
you got me, Brian. I was just about to bring it up.
Sorry,
I'm sorry. Brian is mentioning his Picasso that he was showing me the other day. So the Picasso that Brian has, if Brian dies in France as a French domiciled person and all the Picassos he has, he leaves them in America, in a home that he has in America, that will most likely not be subject to inheritance tax because that will be a U.S. situs asset, U.S. sourced asset. It'll only be subject to U.S. inheritance tax. Okay? So again, the location of your assets matters. Okay? You know, for example, sorry, Adrian, go ahead.
Jonathan, what about your retirement funds and 401ks that are held in the US?
The retirement
And
funds
maybe you have beneficiaries set up for those. How are those handled?
generally that is subject to French inheritance tax. Generally, that would be subject to French. So again,
they're financial.
Real estate or non-life assets not subject to French inheritance tax. Sorry.
You know what's not here though, Jonathan, unless it's on a future slide.
What?
Which is one thing I talk to my clients about on a regular basis.
What is it?
It's called buying property, buying assets in the name of your children.
That's usufruct. Well, yes, you can do that. So yes, it's possible. Buying assets in the name of your children can be done. The issue with that is, folks, so again, before y'all run to Adrian and say, Adrian, I'm Bob Smith and I want to buy a property, but I'm going to put it into the name of my daughter, Joan. Kind of weird that he named his daughter Joan. Long story short, that could be seen as a gift in France. Now, if Bob comes and says, my daughter Joan is going to buy me a house with assets, money that she has in her bank account, cool. Mazel tov, Bob. Your daughter.
Well, it has to actually, no, legally the money has to come from the bank account of the person who's on the title. Okay?
Mm-hmm.
So, and I've done this, I can't tell you how many times now. But, you know, you can do what's called a démembrement, as you know, which is a 70% the child, 30% the parent, and they end up owning the property with no inheritance tax paid whatsoever.
So démembrement, Adrian, is on the slide. Thank you for bringing that. So we're going to skip straight to usufruit.
Okay,
Usufruit is the subject of démembrement, okay? And this is a hot topic and a cool topic because it's funny from an American perspective. We don't have it in America. This is French specific. Oh, France has it and it's specifically used in France. What it is, okay? You buy a house. The house has walls. It also has the right to party inside it, okay? That is the full ownership of a house. You have the walls and you have the party. Long story short, what you can do in France from an inheritance perspective is you can split out the ownership between the walls and the party, okay? And what it means is you can take the party and keep it with yourself as the bare owner of the property. As the usufruitier of the property. Sorry, I'm getting myself twisted up here. As the usufruitier of the property. Usufruitier of the property is the person who has the right to use the property. So with démembrement, you keep the right to use the property for your life, and you transfer the ownership of the walls to your children or to your heirs. The advantage of doing this is it gives you a reduction, it gives you a reduction based on your age. So if you are in your 50s and you transfer the ownership of your property in France to your heirs, the value, let's say the value is 100,000. The value of the walls and the property and the use of the property is 100,000. Well, they'll say that the walls are 50,000. The property is 50,000. The use of the property is 50,000, and it'll be subject to inheritance tax that way. It depends how old you are when you give the asset.
So unfortunately, I fell in the 71 to 80 category. Okay. So basically, right, my daughter has 70%, I have 30%, but I have the complete usage of the property. The other thing to note, though, is that I also retain all responsibility on the property as far as the taxation is concerned, and all the other expenses of it. But when I die, she'll inherit it totally tax-free.
Tax-free, because basically the inheritance calculation was done at the time where Erica took the bare ownership of the property. So a usufruct is a great tool to talk to your notary about when doing the purchase, either before or after. And it's always at the ones. As you'll see here, it's at the ones. So if you ever talk to me, I try and be as discreet as possible. I always say, unfortunately, sir, madam, how old are you? And I'm not asking for my health. I'm asking to figure out the usufruct categories. Again, it's a very valuable tool to transfer the ownership of your property to your heirs with a reduced value. Okay, the younger you are, the more reduced, the more the reduction is.
Again, and there's one other note I want to make.
Yes, please.
Okay, and that is that even though I only have 30% and she has 70, the entire 100% of the property counts toward wealth tax.
Yes, on the
right,
usufruct
because as the usufruit in French, I end up taking full responsibility for the property until my death. So it still counts towards wealth tax.
Yes. And again, the nice thing about this is that by using the usufruct, as opposed to putting it in the child's name. So if you buy it 100% in the child's name, and then you get into a falling out of the child, they can kick you out. The usufruct, no matter what happens between you and your child, the child can never kick you out. Again, unfortunately, we hope that never happens to anybody, but it may. So long story short, the usufruct is a valuable tool to keep in your arsenal. And again, facts and circumstances.
Well, it's a great way though, Jonathan, honestly. With our clients are primarily 50 years old plus, right? And even older. And they all have grown kids. And they've all acquired a pretty decent amount of assets in their lives, right? And so it is, they're thinking originally, well, we're just going to rent. We don't really want to have the hassle of buying a property, blah, blah, blah. But then this makes sense, okay, for them to actually purchase a property and enjoy the property, die in the property, okay, and reduce the tax for their heirs. It's a way of transferring their assets.
Usufruct is a great tool. It's a facts and circumstances question. I had an attorney write to me the other day saying, hey, I have a U.S. resident, French non-resident. They're buying a $1 million piece of property, but they have $50 million of assets in the U.S. So therefore, in that case, usufruct actually didn't work out best. They were better off not doing it and paying French inheritance tax, because then the French inheritance tax reduced the U.S. tax to nothing. Again, facts and circumstances.
It depends.
It depends, exactly. But usufruct is a valuable tool to keep in our quiver and to think about when doing the purchase. Again, have a conversation, talk it through. It's just here. We're just here to just share what you can do. The last two things that you can do. Assurance vie. Now, Brian loves Assurance vie. I'm telling you, every time I talk to Brian, he says to me, Jonathan, let me tell you how great Assurance vie is. And then I have to listen to him speak for about 20 seconds about how great it is, because that's how long Brian usually talks to me about Assurance vie. Assurance vie is a great tool, and I'm going to steal this straight from Brian Dunhill. It's a great tool if you're in the later years of your life and nearing death. The reason for that is that it has French transmission rules are quite significantly lower if you have it in an assurance vie investment. You can potentially get up to 152,000 euros per life insurance contract tax-free. Okay, so that's a great way to transfer assets to your heirs.
The French have been even nicer. It's 152,500 now.
500? Oh, I said 500. I missed that 500.
There's only a few times that you can correct Jonathan.
No. Well, yes, no. I'm sorry. I missed that 500. You're right, Brian. So 152,500. So again, a life insurance up to 152,500. Depends how old y'all are. Long story short, a life insurance policy may make sense. If the problem with life insurance policies, and again, this is why Brian doesn't actually love them, is that generally it's used as an investment tool, and they invest into something called PFICs. And if you've never heard of a PFIC, go back and look into other presentations that I've done. We've talked about PFICs. If not, Brian Dunhill on Dunhill Financial's website has a cool video, if he still has it, on what is PFICs. Long story short, PFICs are bad, okay? They're a four-letter word, and most four-letter words are not generally very nice, and my kids should keep it out of their mouth, even though my son did use the word PFIC in a big speech he made recently, and Brian was really impressed. Brian applauded quite significantly.
So Jonathan and Brian, we have 3 minutes left.
Okay.
Yeah, but I have a suggestion.
Yes.
I would really like to give our audience 10 or 15 minutes worth of Q&A, if it's possible. So was everyone on the team willing to extend this by 10 or 15 minutes?
Absolutely.
Sure. I'll just get the pizza. Let's go. Let's go. Again, I apologize, folks, for the morbidity of the subject, but it's important that we talk about it.
We're all still alive, so it's okay.
Exactly. But the last planning idea is don't die in France, folks.
No. Don't die
domiciled in France. Okay.
Hey, Jonathan, I'm going to throw one extra one in there if you don't mind.
Go for it, Brian.
Because I know this is something that you review with all your clients and we review with all of our clients. But doing regular Roth conversions means that we're prepaying the tax and your estate is actually lower.
Yep.
So therefore, a lower estate means we're using Roth conversions not just as an ability to potentially baseline and optimize your taxes, but to lower your estate taxes in France because we prepaid the tax. It doesn't work if we're kicked up into the highest tax bracket, but it works for most other tax brackets.
Wow.
So doing regular planning on these types of things can help alleviate some of those tools.
I mean, that's really the key, isn't it?
Absolutely.
Planning is really the key.
Starting planning early and often.
Right.
Right. But the easiest is always to die with nothing. So we've also had strategies where people will take a house, build it into a viager, use that income to go ahead and buy properties back in the States or whatever it might be. So they have nothing really in France because their main property is a viager right there.
Well, there you go. Okay.
You can be creative based on what you need.
Right. Okay. So Jonathan, keep going.
So don't die in France. Okay. Because if you're not a French domiciled resident, you will not be subject to French inheritance tax. Okay. So not dying in France,
No. Jonathan, it's don't die domiciled in France.
Sorry.
If you want to save your heirs money. Let's make sure we understand this, because it won't mean anything to you.
Yes, fair enough.
As the deceased, it is of no consequence.
Okay. Yeah.
So
but basically, if you die in France, as domicile French inheritance law will apply. Not dying in France domiciled in France is the trick. And there are, we can always have a conversation on that. So, Patty, what do we got in terms of questions? I'm
Um,
going to stop. I'm
on
going to stop here.
on that same subject, if somebody has been tax resident in France and they leave and they die, is there a time frame?
That's a great question without a great
Yes.
answer. So, what I like to
Mhm.
say is don't die at JFK. So basically, when
Or
you're flying over,
CDG.
from Nice, I don't know if it flies to Newark. Don't die at the airport. Die after you've included domicile in America. Now, 3 months, 6 months, a year, facts and circumstances. A year is certainly enough. But again, it depends on your facts and circumstances, depends on your life. But yes, it's
Yeah, but then you
generally,
can't afford the health care when you go back to the States.
Exactly. All that
but
money's going to go pay for health care instead of to
yeah,
France for inheritance taxes.
yeah.
Exactly.
Right, right.
But yeah, but basically facts and
I
circumstances
mean,
will win the
it
day.
really is sort of true because at that age, you're going to need a lot of health care, and the health care can get so expensive that you'll end up eating up all your money in the U.S. health care instead.
Mm-hmm.
Anyway, okay, keep going. Another question.
Exactly, exactly. So Jonathan, there's some people asking for clarification on their IRAs, 401ks that are being left to beneficiaries, that how in the heck are these people who live in the US subject to French inheritance taxes?
It's generally taxable in France. So all your non-investment, all investment accounts and whatnot will be reported on your French inheritance tax return and be subject to French inheritance tax in general.
And then it gets distributed to the beneficiaries?
Sure.
Yeah, generally in the US, they're going to require to make the distributions from the IRAs a document from the US Embassy that states that the country's taxation has been paid, and therefore they can distribute it from the IRA. The last
Okay.
couple of years, that's been very hard to get.
And is that the same too, if besides a beneficiary, that's the same as a transfer on death? Pretty much the
Yes.
same
Correct.
thing?
Yes.
Okay.
Yeah.
Okay, let's see what
Patty, I
else.
see one question that came in that says, I read that a US person could have a French lawyer create a French business entity company, which then lists the US citizens as part of the company. Wait, now I can't see it because it just moved. I was reading it. But basically, I think that question has to do with creating an SCI.
That's how I read
It's a
that.
French Société Civile Immobilière, and then there are different owners of that property. And therefore, they are the owners of the property, so the inheritance tax is not on it's just ownership. It's the same thing. It's basically that they're not paying tax on their own ownership. That's
But
all that
there's
is.
Yeah.
but there's other um complications of owning with an SCI, correct?
Yes, exactly. There are other reasons not to have an SCI. But
Mm-hmm.
an
Yes.
SCI, it was actually originally the SCI was created in order to avoid that kind of inheritance tax. Because if you own 25% of a property, okay, and one of the owners of that property dies, they only had the other whatever other percentage they had. So it's the same story as sort of like the démembrement in effect.
Not exactly. SCIs are a complicated tool. It is again something I would recommend having a conversation about with your facts and
Absolutely,
circumstances and what you're
it's a
going to do.
complicated tool, but it was
It's
originally designed for this purpose.
but it's not straightforward, and it's not something I'd recommend for everybody.
No, I agree completely.
It's
Exactly.
definitely not for everybody. And again, facts and circumstances.
Mm-hmm.
Okay. Any other questions of interest?
Jonathan, we have several questions again asking for clarification on when you become tax resident or when you're considered domiciled in France.
So
That's
Residency
the number one question always.
It is, it's asked
residency
several
looks
times.
residency. Okay, so long story short, on this one here, it's very important, and it's very important to understand. It's a facts and circumstances question. It depends on your situation and on your lifestyle. Residency, from a tax perspective, we first look at internal law, French internal law. French internal law, it looks at whether or not you have a home in France, do you work in France, where's your center of vital interest in France. Then we look at the treaty, which looks again at where do you have a home available to you, where's your center of vital interest, where's your habitual abode, where are you a national. Long story short, you move to France, you sell your house in the US, you come to France, you rent a long-term apartment, you spend the whole year in France, you're a tax resident. You're more likely than not at that juncture a domiciled in France as well. Again, residency looks at where is your life. Domicile looks at where is your life. Domicile is more strong than residency, but it really looks at where your situation. So here's the long story short. If you're coming to France to move and to live, you're probably becoming a resident. If you're moving to France to move and to live and you're selling all your house in America, you're probably a domiciled in France. But again, it depends on your situation and on your facts and how you live. It really does depend. But long story short, residency comes down to where do you have a home? Where do you have anything? Where do you have your home? Where do you have your family? Where do you have dinner? Kind of things. Domicile looks at pretty much the same thing.
Well,
So again,
how I understand domicile, Jonathan, correct me if I'm wrong, is your intentions as well. So therefore, you can be out of the country for certain periods of time, etc., but it's not defined. It's based on your intention, and that's why there's some subjectivity to it.
there's a
And
lot
why
of subjectivity on this one, Brian. It's
testing these by, gifting, if you have a large estate, if you have a really large estate, giving a gift over 100,000 becomes this way that the French government has to define how they're going to categorize that 110,000 euro gift instead of 100,000 euros. And therefore, you've got a definitive answer for that day that you were not domiciled there.
But
But
again, it also again, you could always ask the authorities. It costs money to do. There's ways to go in and look into it, but again, yes, it's again facts and circumstances. I'm sorry to say it, to put it that way, but it really depends. But again, if France is where you live and France is where you make your life, you're probably a resident. It's probably your domicile. That's the general overarching, all I can tell you today answer.
Okay. Should we take a couple more questions and go for another couple of minutes?
go for it. You have some
Let
in
me know,
mind, Adrian?
Adrian, if anybody sees anything. I'm scrolling through.
If Bob Smith dies and has two children, is the 100,000 euro tax-free
That's a good one.
applicable to both or just one?
Yeah, that's
The
a good
100,000
question.
euro is per child.
Yeah.
So the exemption amounts we talked about was per child. I have not looked at the questions before now, so I just
No, but that's a
that was
good
the
one
first
too.
one I literally
That's a good
opened.
one, yeah.
So like Elon Musk could basically exempt his entire net worth?
100,000 euros per
That was a
child.
bad that was a bad joke, wasn't it?
No, it was a joke that could, I'm not. Yeah, it was a good one. I enjoyed it. But 100,000 euros per child. So again, you have one child, it's 100,000 euros. You have two child, it's 100,000 euros per child, and it's 100,000 euros per child per person. So again, Bob and Joan, they can give to their kid, their child John, 100,000 euros each when they die. So that John will get 200,000 euros tax free. Their daughter Jonette will get 200,000 euros tax free as well. Okay, again.
So knowing that you can adopt anybody that you want, and you can adopt them even as adults, that means anybody you want to give money to, you just have to adopt them, and you can give them 100,000.
Yeah, basically, right?
Yeah.
So Jonathan's starting an adoption legal service?
Oh no. No. I'm good. I'm good. I'm busy enough with my boys. I'm busy.
Can you adopt your nieces and nephews?
I don't know.
Depends what state you're from,
But
Patty.
maybe if their parents are no longer alive, probably.
Maybe. We have a question about a or actually,
We've answered the
a
Roth
question
questions,
about
Patty.
converting a traditional IRA to a Roth IRA while living in France. How does France view and handle income tax on the converted amount?
I treat it as a pension distribution. I treat it similar to a general pension distribution, benefiting from the deemed tax credit under the treaty, and thereby it's the bee's knees for American retirees.
In English, basically, it's taxed in America, not in France.
Yeah.
Okay.
So should we wrap it up here?
I think this would be a good time to
Unless
wrap
there's
it up.
anything really pressing, Patty?
No, because a lot of these questions were asked several times.
Okay.
Yeah.
First,
And
oh, sorry, Patty.
Adrian, you usually do a wrap up too, so anything we haven't answered, you may cover in a newsletter.
Yeah, I can certainly look at all these questions and see if there's anything that, we weren't able to answer. I can do that in an upcoming newsletter for sure.
Mhm.
I certainly want to thank everyone for
Yes.
participating in this because, as always, with Jonathan, it's always fun, even if we're talking about such awful issues as death and tax and things of that nature. And I would like to remind everyone that we do these forums with Brian Dunhill once a quarter, and we will have a new calendar for 2026 coming up. So this is the last one of this season, and we try to find, topics that are of interest to everyone. This certainly is. This is probably one of the biggest topics I have with our own clients. We talk about inheritance, and it's complicated. So, we need someone like Jonathan to lay it out for us and make it simple. This presentation will be available on Dunhill Financial's YouTube as well as on our YouTube channel in the next few days so that you'll be able to watch it again or pass it on to your friends or whatever. And thanks to this amazing panel. Thank you all very, very much, Jonathan, Brian, and Patty.
And we can't forget Vincent behind the scenes,
All right, Vincent
helping
behind the
Jonathan,
scenes. And
our-
Paulina, who keeps all the tech stuff going.
there he is.
There you go.
Yeah, hiding. There you go. Thank
Adrian,
you, everybody. Have a wonderful holiday.
have a wonderful holiday season. Adrian, thank you so much for being the co-host for all of these. You are amazing as always. Patty, thank you for being our MC, or if I don't know if what title we give you nowadays.
Operations.
I don't have a
No,
title. Yeah.
I like MC better, Paulina, thank you
Anyway.
for everything that you do. Everybody, thank you for joining. And we look forward to seeing you in the new year, if not
And
before.
next year.
Great.
Happy New
Thank you,
Year.
everybody.
Happy New Year.
Bye.
Happy New
Thanks a
Year.
lot.